Fine. Okay, right, let's get going. Now, guys, I'm on a bit of a tight schedule today, so I can't be with you for what will be more than about 20 minutes on this session. So what we'll do, we'll just rattle through. And let's get started with the charts that I've got on the screen. What I'm looking at here is a little selection of charts. We've got some of the major commodities. And the two that I'm really interested in, well, we've got three charts here I'm really interested in today. And the most interesting one is what is going on with the dollar index and what is going on with gold. And as you can see, that these are inversely correlated. So as the dollar goes up and gets stronger, then we've got gold coming down, which is as it should be. So strong dollar means that the pricing then of the likes of gold, and of course it's exactly the same with silver, and to a slightly lesser extent with oil, and also to a slightly lesser extent with copper, then as the price of the dollar goes up, then these will come down, but the actual value of them will remain exactly the same. Now, what we've seen then is that as this dollar is going up, we are getting an increasing suggestion that there is going to be more and more worldwide deflation. And we're getting a lot of this coming out, particularly of Asia, where we're finding that the suggestion that QE is going to be coming to an end is starting to really hit parts of their market, and particularly real estate markets, where we've got sort of various luxury developments. In fact, a friend of mine actually lives out in Singapore, lives in a luxury development, and works for one of the banks out there. And he said the amount of vacancies in his block are really quite amazing. So we're getting all sorts of stories coming through that the markets which have been totally manipulated over such a long period of time are now starting to smart, and we're getting a further set of crises through. However, that's just looking at something of the bigger picture. Let's just look at some of the real interesting moves that we've got going on. Now, I've mentioned the dollar index. We've got this dollar index really on a rampage, and there's no surprise because we've got a reasonable degree of recovery going on in the States economically, but also we've got the saber rattling going on both in Europe, which is now getting to fever pitch, and we'll probably reach that sort of pinnacle of fever pitch this weekend with the meeting that is going on with we've got the G20, and we're then going to have all sorts of suggestions coming out that there will be the American side wanting to really ramp up the Ukrainian situation, and I guess the Europeans will be not quite so keen on ramping it up further. And then, of course, we've got the Middle East. So while all this is going on, we're also getting the stock markets, which are moving up strongly, and we'll look at a little correlation on that in a moment. But let's just look at all of these charts, which are absolutely going through the roof. We've got the USD, look at this, on a tear up to a very important 105 level. And it's now completing a 5-wave move. If we just look at the start, we've got a wave 1, we've got a wave 2, we've got a longer wave 3, we've got a corrective wave 4, and then we've got a wave 5, which is in the making at the moment. At some point, it's going to come to an end, and there are one or two little measurements that we can do to give us some idea where this is going to move. And based on standard measurements, this has got a little bit more to go. It may well have quite a lot more to go, but for the moment, we can suggest that it just might want to go further. Now, over to the Canadian dollar, USD CAD, the loonie, then what we've seen on this daily chart is it hit a back level, hit a couple of the really important harmonic levels, and then it just collapsed. It collapsed out of the sky. We got a really good engulfing day last week, and on down it went. But also, last week, okay, towards the end of the week, what do we get? On Friday, we get a very, very bullish candle, okay, very, very bullish day, completely encapsulated Thursday, and there it was at a 50% level. We've now had the follow through. Narrow range day yesterday, and of course we've now had takeoff. So has to be respected that this one is moving on up, and it remains to be seen whether we're going to get more than just a 2 or 3 day wonder out of this, because this previous level of 1.1 looked to be fairly important. If it can get itself above there, then really we're going to see much higher levels. But for the moment, we've got to be a little bit wary of it actually pushing through that previous high. So that's a couple of those really rather important ones. And I think it's well worth now just taking a little glance at a correlation that I alluded to. And this is the correlation between the long-term correlation that there is between the stock market in the US, so this is the ES, proxy for world stock markets or Western world stock markets, and then the USD JPY. Just look how overall there is a correlation with this one. And most recently, we had kickoff. Now, if we just check the date on the low at the start of this move, okay, so that's the 8th of the 8th. If we then look at this low, I can just hold it still far enough, at exactly the same time, they kicked off together in lockstep. The previous decline came down, and away they go. So where we get the USD JPY moving up dramatically, we then get the ES moving up dramatically. And this correlation really does need to be looked at very carefully, because they do move not in lockstep, but they move very closely together. So if we start then to get a reversal on one, and what so often happens is the USD JPY actually leads the stock market, then we could start to be looking at the end of the stock market move. But is there a lot more to go on the USD JPY? Well, there may possibly be. Now, let me just run this out a little bit further. We've got the weekly chart showing the big run up that we had towards the end of last year. And will this previous high be taken out? So that's going to be the level to watch. If it is, then we can expect the stock market to just continue to move on up and up and up. And look at that. We can now see the longer term correlation with the sort of relentless rise in the US stock market. And of course, we've had this relentless rise also in the USD JPY. Right. Okay, guys, let's go and look for a moment at the Euro GBP. Now, this is quite an interesting little market, because to all intents and purposes, we would look at the euro as being a pretty weak currency. Mario Draghi has told us that he wants a much lower euro. And, the world has been suggesting that, they bought that story. They bought the story. And I'm not going to display it right now, but you just need to take a little glance at the commitment of traders, and you will find that there is an all-time massive short in this market. Not just one short, but there are thousands of them. So what very often happens is that when a market is being talked down, and of course the latest people to talk down the euro have been Goldman Sachs. And in fact, they put a torpedo under it on last Friday, last trading day of the month. And the cynic in me will suggest that just maybe they needed to do a fair bit of position squaring before the end of the month. And so they got their positions on and then put that note out into the market. And, it was clover, and they would sort of be making their money for the month. And of course, there are all sorts of stories of their involvement in the Portuguese bank, which has been taken into public ownership, a bailout, and things just effectively collapsed. and how they had a very heavy personal bond involvement in it. So there we are, that was Goldman. But on the face of it, one would imagine that the euro then, on what we know, is a basket case against a very strong British pound. And that's exactly what this chart has been telling us. What we just had, starting yesterday, was that it hit a back level. And it's had a really good day today. So one starts to imagine, well, just why is this? And we've got to consider that, well, one has been talked up an awful lot, that's the British pound, and one has been talked down an awful lot, and that is the euro. And there comes a time when all of that has to reverse. And it's just maybe a little temporary blip, and it may well carry on its sweet way up on the downside. But we've just got to respect what is actually going on in the market and ignore all of that chat and all of the talking heads and all of the, quasi sort of economic theory that gets put out by so many people. We've just got to see and look at what is actually going on. And it's not a brilliant performer, I have to say. The ATR today has gone over 100%, but we're lucky to get sort of 40 pips out of this in a day. So it's not a brilliant day trader. Once the big trends start moving, then it's a longer term trading market to get involved in. So there we are. That's the euro GBP, looking very, very interesting for the moment. And it's managed to get a reasonable position on yesterday and get the partial profits taking stage. And we're just sort of watching now to see if it will actually run on up and put in 100 pips from here, bring it up to the old high, up around about that sort of 80-20 level, thereabouts. It may happen, it may not happen. So, we've just got to wait and see that. So let's just now consider one or two other markets which are connected. Just talked about the USD JPY wanting to move up really quite dramatically. And we're talking about the euro that is getting to a point where it's getting really quite interesting. So let's just go and look over at first of all, let's look at the euro. Right, here we go. We're just going to look somewhat longer term on this one. So we've got the euro collapsing really quite nicely, and it's down, down, down. There was a suggestion that we might get a bit of a pause here at the 132 level. We're now maybe looking at 131. Goldman's target is right the way down there at around about, well, depending on whatever time frame you want. They reckon it's going to get down to 120. Well, that may well be the case. That may well be the case. But what we need to just look at are the various bands. Now, these bands are important potential support bands. We had that first one at 132. The next major one here is at 130. And despite the width of it, we've got a whole stack of supports potentially coming in here at 130. And then the next one, as we can see, is right the way down here, under 128. So the assumption is that if this move continues on down without pausing, it has actually just recently passed through dark ear levels, back levels. It's now double bottoming on this previous low, as we can see, running back to here, a previous potential support zone. And supposing this one does push through, we've got to look then at 130 being an important level. So well and truly on a tear, well and truly in a downtrend, moving down, we have to respect that. And short term, we do get these little areas where we've got, for instance, we've got a crab level picked up. We've also got a nice little pre-drives pattern. And if we look shorter term, we come down to a 15-minute chart, we can see that there are some really good little rally back days. And for breakfast traders, for morning traders yesterday, then we had a really good little run up, followed by an equally good run down. And then overnight, as you can see, it's done little false breaks in both directions. We've got a very strong false break. Again, look at that at the Hallmark level, up to yet another level, whereupon it pushed its way back down. And this little current consolidation is suggesting that it is going to keep on moving back on down. So, there are those who've said that, well, there just aren't any opportunities in this market. Well, there most definitely are opportunities, and we're just looking at them there. Now, let's just put together the euro and the Japanese. And we get the euro yen. Now, euro yen on this weekly chart then is showing that we've had this big run up, and then price came down, and it came down really quite dramatically. And if we just do a little bit of Fibonacci work on here, we find that the area of support there is actually centered on the 61.8, and it's been there now for a whole series of weeks. It's been here throughout the summer. This was a target area that was expected to get to, which is in the region of that previous low. Could we be ready for a major move up or a major collapse? Well, at the moment, it's suggesting that just maybe it's consolidating here, and it could be ready to move. So does that suggest then that we're going to get much greater movement with the US dollar against the Japanese yen? So the US dollar moving up strongly, still further, against that Japanese yen? Well, yeah, that's one possibility. But the other possibility is that we may find the euro bottoming at some point and deciding that it's going to move around. Now, what could be the catalyst for that? Well, one of the catalysts could be just keep watching that Ukrainian situation. If for whatever reason the general cacophony of noise coming out of NATO particularly, that would have died down. And if some accommodation could be reached with cooler heads on the job, then we just might find that we're going to get a major rally in the euro. So there we are. That's just looked at this daily chart on this euro yen. It bottomed very, very neatly. We can see at bottom a couple of weeks ago, we've got a higher low, still in a downtrend, but one well worth watching. We've got a double Hallmey, and that breakout actually occurred. It occurred this morning, up 50 odd pips, and one wonders if this is ready to really take off. This is an excellent mover, and I certainly commend it to be one of those that is very, very well worth looking at. Right, guys, I'm going to have to bring this to a close in the next few minutes. But let's just consider one of the other markets which, to some extent, has been defying gravity. But I'm just going to take a quick look at the cable chart, because this is a market which has gone through disappointment, and the disappointment on it kicked off after we had a technical signal in the wrong place. Well, yeah, I mean, good point, DV. Good point, DV. Absolutely. And where there's great disappointment in the market, then it's the opposite trade is the one to actually take. But this move kicked off on cable on this technical move, which was suggesting that it just might want to move up, but it was in the wrong place, and consequently it became very, very bearish indeed. And we've now still got this one moving on down, and as you can see, there is still a little bit of potential downside to this one too. At the very least, spend a little bit more time in this 165 region, and we just need to keep watching the round numbers. Notice how these pauses are all at the round numbers: 169, 168, 167, 166, the next one is bound to be here at 165. And if we can get down to this region, 164, we're going to be in Gartley territory, and we could well be ready for a decent bounce. But there we are. The disappointment in cable, I guess, will actually come to an end at some point. And we need to be absolutely at the ready for that one. Finally, we're going to look at the Australian dollar. Yeah, got it. Now, the Australian and the New Zealand are very interesting markets. The New Zealand dollar was bid up, and then a very business disappointment came in, and it sort of caved in. But what of the Australian dollar? Now, why is the Australian dollar not collapsing in the way that both the euro and the cable have collapsed? And it's just not responding in quite the same way. We're getting these moves, but they're only small, muted moves, and we're not getting any major breakout. This back level, okay, this back level is really quite interesting. Will it or won't it actually hold? If we get price on this little run down, moving down through, it doesn't need to go a lot further in the scheme of things, but if it can get itself down below these lows, then it's entirely possible that this is a very clear head and shoulders pattern that could push it on back down to the 90 region. But yeah, well, that's what we've been faced with, isn't it? We've had risk on, risk off, risk on, risk off. And of course, that's what we got right now. Risk is back on. But we're getting these flip-flop markets. It's just flipping from one extreme to another. And at some point we'll sort of get back to normal. But I think we've got years to wait for it, so we've got to cope with what we've got. Now, I guess one of the main reasons that the Australian has been sort of held up really quite nicely is because the Australian economy has been strong. In fact, it's been too strong. And despite the fact that we've got even further stories of Chinese demand just drying up for aggregates, etc., it is becoming, it is a safe haven currency. So far, it's divorced to a very great extent from all of the excesses that have been going on and are still going on in both Europe and North America, within the banking system, and they've got a high yield. So the net result of that is that people would be much happier with their money in Australia than they would in many of the other economies. So let's just keep in mind that this might possibly hold. And if it were to hold, we could get a strong rally out of this. So at the moment, what I'm suggesting is that this is very much an each-way bet, but we shouldn't hold a breath for any really big move coming out of it. Right. Okay, guys. Well, that's as far as I'm able to go this morning. I've got to shoot off and get involved in one or two other things right now. So many thanks for being with me, and I just apologise on behalf of Epic Street for the delayed start today and the technical problems that there were. But hopefully that will be ironed out, and we'll be back with you again soon.